Good afternoon, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is Monday, February the 18th, 2013, and here is this week's Week in Review brought to you by WallStreetTrading.com. Now, I should have dropped this video out a little bit earlier over the weekend so you guys would have had a chance to look at it, but I've been real busy. And plus, today's a day off, so I'm pretty sure most of you guys are doing most of your stock research today anyway. So I figure I'd drop the video before 12 o'clock or 1 o'clock and give you guys a chance to take a look at it and then enjoy the rest of your guys' days off. So let's go ahead and get into it. I want to first start by taking a look to see how the indices close the week out here. I have a couple key sectors here that I have marked off as well. You can pretty much see through the 11th to the 15th here, the NASDAQ was pretty much flat, 0%. That's pretty interesting. The Russell 2000 was up 1.11%. The Dow Jones Index was up 0.08%. The S&P 500 was up 0.18%. Crude oil, the WTIC was down 0.76%. Taking a look at the OIH, was on fire this week, up 2.48%. Take a look at the GLD. GLD got smoked. Exactly what we've been getting those clues for on the daily charts every time we did our daily after the bell market summary review. We talked about how gold was always up in the morning and then not able to hold those gains in the first 30 minutes of the day. Then it would sell off and get a bounce. And just seeing that pattern just showed you there were people selling those pop-ups, and then everything finally came here to fruition where they just finally knocked it down and just smoked the people that have been buying the dip buys. Not saying that gold can't go back up, but think about that you bought a nice amount of gold 2 weeks ago because you're saying, okay, I'm just averaging down. I'm just averaging down buying gold. I know it's going higher, so I'm just averaging down. All right, that's fine. But, you would have been better averaging down once you got smacked down, which the clues that we've been going over in the videos have been showing you guys it could get smacked down. Now, if it goes down a little bit more next week, it could be a good buying opportunity for a nice little buy the dip bounce. Which probably is going to squeeze some people that are trying to get short down here now. So we'll see. We'll take a look at the video. We'll take a look at the commodity here later on in the video. By the way, this is our weekend review, so it is going to be an extended video, and I have a lot of good stuff for you guys. So make sure you tune into the whole video. Make sure you share the video, and make sure you check out our website, WallStreetTrading.com. For any of you traders out there that are in the South Florida area, I went ahead and started our meetup group back up again. It's called Wall Street Trading South Florida. You can go to meetup.com. You can check that out. So in any case, GLD was down 2.47%. The GDX, the gold miners, got smoked as well. We've been on top of this. Gold miners were down 3.81%. Financials were down financials were up. XLF was up 0.45%, and the semiconductors were doing pretty well this week here, up 0.42% here. So some decent action. Again, pretty much the markets, you're not seeing those gains in the market that much. You kind of see things starting to slow down. Volume's kind of dying down a bit. And I have some good analysis to show you guys on the SPY why I think that's taking place up here at these levels. All right, with some technical action there. So that's how that's looking. Let's go ahead and jump into the charts. Again, I'm going to save the S&P for the last index that we go over. So we're going to go over the Qs, the IWM, then the S&P, then the currencies, then the commodities, then some key stocks to watch, and just a little view of the market here. So let's get this thing rolling. So we're starting off with the monthly chart of the triple Qs. You can see the triple Qs are still holding above that key base around that 64.73 level. They're still holding the moving averages pretty nice on the monthly chart, and we still have a high. We're still above last month's high, so we still have a nice little green dot showing you that we're currently closed at a higher price than last month, which is still good. So it's Qs on the monthly chart look pretty decent. Let's take a look at the weekly chart. Now the weekly chart is a little bit interesting here because believe it or not, we have a possible head and shoulders pattern that could be in play on this major time frame here. All right, and that kind of worries me because volume has been dying out up here, and we could pull back, but we're still waiting for some more clues. And you guys know the Qs have been the index that has been the weakest. Let me take off these studies here. You guys can see what I'm looking at here. All right, and what I'm looking at is, first of all, we broke above this base at 60. We rallied all the way to 68.50. We pulled all the way back to 60. We rallied all the way back up, made a higher high at 70.54. We pulled all the way back. We didn't pull all the way back to the 60 level. I'm not sure why, but we had this key trend line of support right here Well, I am sure why, because people wanted to buy it right there, of course. But what I'm saying is that, usually we would have pulled back to 60 to kind of recheck this area, kind of like a little double bottom play. But since we had this key trend line that people were using to manage their risk off of, which we did highlight, they got long right against that trend line. So we weren't able to go down there and hit that $60 level, which I think is a possible neckline on the triple Qs. All right, and now what we have going on here on the weekly chart is, we still have this nice expansion candle that we made on the last week of 2012. All right, nice expansion candle right here. All right, top of the candle is right there, and then we just kind of based against the 66 level in this little range, and then we just slowly started breaking out. All right, when we broke out, we had one confirmation. We had one close. We had the confirmation close, but the follow-through bar, that confirmation close, did not break out. So that momentum is kind of dying out, which kind of explains the low volume we have in the Qs. And then if you take a look at the chart now, you see a possible rising wedge on the weekly off of this little pattern right here, off these key inflection lows that I'm marking right now. All right, so this is something to keep. So this is something to watch very close. The Qs, if they do not break back above 68.50 and hold, this could be topping out a little bit right here for a short-term pullback, possibly, and most likely back down towards that 66 level. Then if we break down towards 66, we got the bottom of this level right here, which is maybe around, say, 65.75. If we break below that, we can come all the way back down to 63.50. And however, if we hold last week's lows, which everybody's going to be watching pretty closely, I'm sure, which on the Qs, that is going to be around 67.56. We hold 67.56, and then we take out last week's highs, we can make a move up here towards those 68.50s. We break above 68.50, and we break above this trend line and hold above it and close above it next week, then that would mean that this pattern is most likely, not going to play out. This little rising bear wedge that's trying to form here, and that means that this thing could make a nice move back up towards 70.54. So these are the different scenarios that you have to have planned out in your mind. These are the different scenarios that you say, okay, if this scenario plays out, I'm going to look at these stocks. If this scenario doesn't play out, I'm going to look at these stocks. These are all the things that you should have set up, and have set up like in a Excel sheet, kind of like how we have for our traders with our power hitter sheet. Kind of like I had set up where I have bull range setups, bear flag setups, breakouts, breakdowns, key intraday levels on a stock, morning pop and fade, stuff like that. And this is something that we're going to go over this Thursday. I plan on doing a webinar on our website. Check it out. The details will be there, wallstreettrading.com. Going to do a webinar on how to set up a playbook, how to set up strategies that you're familiar with, that that you want to go over and like kind of condition yourself to do. So be on the lookout for that. Make sure you check out our website, check out our Twitter, our Facebook. All that stuff is there on the first screenshot on the video when it rolled. Before we get into the video, you can find all the information there on networks. So in any case, the Qs, if the triple Qs breaks below last week's lows, about 67.56, we're going to be looking for this to pull back down towards maybe 66, at least 67, then 66. If we break above here, if we break above this key 68.50 level again, we get back over 69, well then we can maybe make a nice move up here towards $70 a share. We have to wait and see, but you can clearly see how that pattern could be shaping up right there. All right, so let's take a look at the Qs now on the daily chart, because this is where it gets interesting. First of all, you guys know that we've been watching this area of supply here. Now, I've extended the area of supply because, I know this was here, but I wanted to show you guys again here that this area of supply extends all the way from right here, from when we broke down right here, from right here, and now we're pretty much chomping through this supply zone. So this is all this area right here is supply, where I have this little red shaded area right here. Okay, so now let me zoom in here to the chart. This is the daily chart, by the way. Let me zoom in here to the chart. And you can see that, ever since we were tracking these levels right here, the triple Qs were not able to break above this 67.38 level. All right, they trapped those longs again. I'm showing you this stuff again. I know, just bear with me. They trapped the longs overnight here, opened it down here. Intraday trap. People probably about the breakout. They think we're going to go. Then they trapped those, got it again here. Trapped those longs overnight. Opened up down here. Trapped the longs again. Sold off. Then we finally gapped above the 67.38 level and had a strong close. But take a look at the volume that we had. Well, the volume that we had on that move was pretty decent. All right, but then take a look at the volume that follows. Look at the volume this whole week on the triple Qs. Looks like nobody's interested up here, guys. I don't know what's going on, but look at this volume. All right, on the triple Qs compared to the volume right here above this key level that we've been recognizing has not been able to hold above here. And now this time they probably got some more people's confidence built up above the 67.38 level. And now if they were to smack it back below 67.38, I can guarantee you're probably going to see a big red bar sell here, a big sell bar to the red side, and we could actually sell off maybe to these 50-day moving averages down here at 66.78. All right, so that's one scenario that I have planned out. Another scenario is we break above 68 level, which you can see above 68 has been acting as hard on the tape. We've been in this little range right here. We break above 67. We break above 68. Nice little strong bar. We close above it. Then we start making our move towards 68.60. Another scenario that could play out. Okay, but the longer we hold above here with the volume lacking and the market internals and stuff like that starting to get weak, you will have to believe that this Qs is actually going to just try to suck some more people in here and then fell back to the downside like it tried to do back here. But this time with more people trapped to the long side. So that's the scenario that we're looking out for. Just keep an eye on those levels on the Qs: 67.38, 68, holding above 68, 68.25, and 68.60. Holding below 67.38, working off that 67 level, then you're working off that 66.50 level, then you're working off the 66. Let's not forget that we have a gap down here. And I say that we could fill that, guys. We're saying these are different levels that you want to have on watch because you never know what to expect. And what kind of worries me a bit is that the volume this week was pretty much to the light side after having a nice expansion move to the top side above that key level. So Qs are definitely on focus. We're going to be scanning for some strong stocks in the Qs. We're going to be scanning for some weak stocks in the Qs. All right, so let's take a look at the IWM now here. The IWM, starting off with the monthly chart, is continuing to outperform here, looking real nice, still holding above that 60.85 or that still holding above this. Let's see here. Above that $87 level there, breakout on the monthly charts looking pretty good. Moving average is looking pretty good. It's still up for the month here above last month's high, of course. Volume on the monthly's still hanging in there. All right, so let's take a look at the weekly chart now. Weekly chart still strong. All right, weekly chart still looking good. It's still cruising along the rising 5 EMA, SMA still hugging that moving average right there, cruising along, so it still looks pretty good. Volume was a little bit lighter than last week, but not a big concern. And this is the Russell 2000's consecutive 1, 2, 3, 4, 5, 6, 7 high weekly close, meaning that for the past 7 weeks it's been closing higher than the previous close, all right, consecutively. All right, so it's a strong trend there. All right, so maybe you want to focus on the small caps if maybe you want to focus on these small caps still if going forward if we continue to check higher. All right, now the daily chart here is right at this key trend line. You can see we have 1, 2, 3, 4 consecutive higher closes on the IWM. Still cruising along this rising 8 EMA and 5 SMA EMA right here. Basically, the 5 EMA SMA and the 8 EMA SMA still cruising along those. So you can use those as a gauge, and those are still looking pretty good. You can see we had some resistance at 92. We break above 92. Well, then you're going to be working off the next whole number since it's pretty much price discovery up here since there's no price action up here. All right, we're just discovering prices up here. All right, so that's how the IWM's looking. Now let's talk about the SPY because that's what a lot of people follow, of course, along with the Nasdaq. But a lot of the S&P is the most followed index, if I'm not mistaken. And the S&P is slowing down up here. You see, we can't break up a 152.50, and now we're basically trading in a range between a short-term range between 152.50, all right, and this 150.120. So about a $1.30 range there. And if we break below 151.5, all right, we could get some selling pressure here. All right, some interesting selling pressure. Now let's start off with the monthly chart and break this down. Now the monthly chart, you can see it's in this little nice little range right here. We are going to be coming to this little resistance zone up here. These levels around 157 or so. All right, from back here in 2000 to back here in 07 and to where we currently are trying to get to right now. All right, so as far as some resistance goes, remember we have this little resistance around 153.41, which comes from the November highs, which is right there. We break above that, then we have 155, and you can see right now resistance is around 152 off that weekly chart. So monthly charts looks pretty good. Let's take a look at the weekly chart on the SPY. The weekly chart, you can see the candlesticks are getting a little bit tightening up here, which means that we're kind of just basically battling it out in this range. No more big expansion ranges right here like we were having for the past couple of weeks. Now everything's starting to tighten up. What are we going to do? Are we going to consolidate up here in tight range and break out higher? Are we going to, pull back a little bit? For the SPY, this is its 1, 2, 3, 4, 5, 6, 7 consecutive week higher as well. And this one's still cruising along the 5 EMA SMA on the weekly time frame, so it still looks pretty good there. But the daily chart is what's kind of showing us that the momentum could be slowing down a bit. and that's just because it's moving sideways. Doesn't mean it's going to roll over, but that just means that they're pretty much consolidating up here, and you needs to figure out if it's going to consolidate and hold at these levels or consolidate and chop sideways to downward a little bit. We maybe have some profit taking. You can see here though. You can see here this week we tested we were still holding the rising 5 EMA earlier in the week. Then we broke it. We broke below that. We gapped down below that on Thursday. Then they bought it right back up. And then Friday we opened up. We opened up right here, and then we sold off. They bought it right back up, and we closed at 152.11. So now looks like we're starting to get a little bit more test of the 20 EMA SMA. So if we break below that 151.73 level and hold, we're going to be looking for a pullback to 151.20, then maybe a pullback towards 150.40, which is a rising 20 EMA SMA on the daily chart of the SPY. If we break above this week's highs, above 152.62, well, then we're going to be looking for a move up towards 153. So those are levels to watch. Now, one thing that I wanted to show you guys on the ES channel system is the fact we're at these key levels. Let me take a look back at the SPY real quick here. 1 second. I want to show you guys something with the SPY. All right. Hope you guys are enjoying your weekend so far. Let's see. SPY. Take a look at this here now. SPY had some heavy selling pressure on Friday. Now, we were nailing the market left and right on Friday. If you watch the videos on that, you can see how we got our traders prepared for that short side action. I explained that in the midday market update. But look at that volume that went off on the SPY. Now we still held up right here, but this kind of tells me that there was some sells in this market. Take a look at the 15-minute chart. I mean, we actually had some nice selling that came in and took place right here, and then they bought it right back up. Another thing that I see here that I can see a little bit cleaner on my charts, but on my other charts that I have here, but I don't have time to show you guys that right now, is we had a neckline pattern that was developing on the SPY around this key 150, 190 level, or you can even call it 152. All right, you could call it 152 if you want to take it from right here. Well, actually, let's do that. Let's take it from right there. So we had this key head and shoulders pattern that was developing on the chart here, which I called out, earlier in the week on Wednesday. After looking at it, this was the head, shoulders, the right shoulder. So we broke down. You can see the volume picks up right here at the bottom of the screen. All right, and then we sell off, but then they buy it back at the close. All right, then the next day they gap it down below that level. Then they rally it back up above this key 152 level. Then they pull it back test holds. Then they float it up on light volume. That allowed us to develop this nice little rising bear channel, which we call out to our followers in the room and our traders that are in our chat room, mywallstreettv.com. If you want access to that, send me an email at ccooper@wallstreettrading.com, and I could definitely get you access to that for our trial. Now, we call this to the short side right here. This in the morning time, and you can watch me on my on the Facebook, on the Twitter. I was calling out VXX the whole morning there. We broke down. They bounced us off that key 152 level again. All right. Then we rallied up, put that lower high in off these bearish signals up here that we're getting. That they just keep on trying to hold the market up here. Put that lower high in, and guess what? Market sells off. All right. Which I believe that also coincided with the Walmart email and all that crap. So it just caused a lot of selling pressure across the board. All right, and a lot of stocks sold off here, like a lot of it seems like a lot of sell programs were linked to a crap load of stocks, and they just all sold off, hence that volume that came in. But still, the amount of selling that was done, was still, big money selling. All right, it was still, people looking to get out of stock, kind of a little fear action right there. The VXX trade that we were calling out all day on the Facebook and the Twitter, made a nice move right here. Which so happens I caught this move right here. And then me and my trading partner that trades at my house went to go grab some pizza, this nice little pizza joint up the road, and then we missed the VXX on this trade because we were not in front of our screens. But then I get back to the trading room, and a whole bunch of traders crushed this trade off using our charts from the chat room. So a lot of good stuff going on there, but you can see how they close us right back above 152 level. So keep an eye on that 152 level on the SPY. If we hold below 152, that's definitely going to be the clue that we could get some selling pressure. Then you want to watch the volume and want to watch for intraday patterns that set up. So anyway, back to the daily chart of the SPY. All right, SPY, keeping on those levels that I just went over there. Now, I want to show you guys something forming on my proprietary ES channels here. All right, and as you guys know, I run my own little channel system. It's my little proprietary trading system. I showed you guys some stuff in here, but this kind of helps me gauge the market as well. Been using it for the past 2 years. It works on different stocks, currencies, stuff like that. I actually teach a course. We also teach a course at wallstreettrading.com on that now as well. So anyway, got these signals where we're getting these little trap signals. If you guys recall, we call the breakout over here in our channel analysis here. A lot of wicks down here, trap those shorts and squeeze them out. Now we made another move higher here, kind of a little wider range. All right, you can see this channel line was acting as resistance, also against this key 1510 level, which actually worked out pretty well. Which is that once you get a break above that, you get a nice little move there, which happened. But notice how we have a nice move here, but we're really not moving out like we should have after. Excuse me, I'm trying to talk too fast here. After all this consolidation, off this little up move after this breakout right here, we're kind of slowing down right here against this trend line that we have right here, and then also against this key 1520 level. Kind of the same scenario that took place right here, except it's taken place, right after this one. So it's kind of telling me it's kind of slowing down to here. So we could maybe be looking to trade sideways between 1510 and this 1520 area for a bit before we see who battles it out right there. So this week could be interesting. It could be a big breakout week. It could be a big breakdown week. As people got trapped, we have some of the clues saying that it could be not a big breakdown week, but some selling pressure. Then we have this analysis right here on this ES channel system that's showing me that we could just be consolidating here in a little choppy range here for this week as well, which means it could be a week that you may want to step back a bit. So we're going to wait and see what happens on Tuesday here tomorrow as we get some more clues. But another thing that I wanted to show you guys was this right here. Let me add these drawings here. Let me see here. Drawings. Let me zoom this chart out for you guys real quick here. Now, when we're moving through all these channels that I have on my charts, well, these channels are like from 2 years ago. These channels are still in play, and they're from 2 years ago. Just go figure that. Just how it's pretty amazing how the market works symmetrically. But let's take out these channels here. All right, and now you can see what's been going on. All right, you can kind of see the patterns that we've been watching inside my little proprietary channel analysis. When we call this little breakout right here on our little channels, you could go back to that video back there in September of last year and see when we called that one out. But I'm not here to talk about what we called out. I'm here to show you guys what we have going on. So take a look. This is a 2-year daily chart here. All right, now I'm gonna add these little drawings that I had in here before. All right, these little trend line drawings. Hold on a second. Show drawings. And check this out, guys. If you guys recall back here in April and May, we had this nice little head and shoulders pattern that we saw pretty clean. All right, that broke down. That was the neckline. All right, remember how we could not break back above that neckline that broke out until we finally did right here. That caused a nice expansion move. We broke below it. We held. We sold off. We sold off again, but then at the beginning of the year, we got back above the key trend line. They've been running it up ever since. At the same time, notice how we're still not above the top of that hammer from the head right there. Let me show you. Let me zoom in here real quick for you guys. Notice how we're not at the top of this trend line right here from the head. All right, and notice how we could use another key symmetrical or say parallel trend line and draw the trend line not from the top of the wick to make the head, but from these bodies. And then look, that's that red line right there. Then when I zoom in on the red line, all right, I hope you guys are following with me still. When I zoom in with the red line, you can see we're right there. All right, so we're kind of right at this key resistance level from that major top, I would say major, even though they kind of, they didn't allow it to break down right here. They kind of soaked the market back up, and then we bought it right back up. Put some money into the market, bought the market right back up. But now, as you can see, we're back at, follow the red line, we're back at the key trend line from that head and shoulders pattern, the head part, from back when we broke down. They saved the market right there. They ride us right back up. You can see our annotation that we've been following along here. And now, volumes just starting to slow down up here. So what could this be telling us? We could be at a nice little topping pattern right here. I'm not going to call it out right now, but what I will say is that we're going to nail this in the chat room when we do roll over. All right? We're going to nail it. Now, I'm not going to get real bullish on the ES up here. All right? And you shouldn't be real bullish on the ES up here, obviously. But I'm not going to be looking for the ES to make a nice expansion move higher until we get above this 1530 level. See some bids hold. See some volume come in with some more conviction. See some stocks acting well and break out. Until then, we can expect some sideways, choppy action, then possibly some fade actions. People are going to start losing conviction that we're going to make a move higher. People are going to start taking profits, obviously. So that's what I wanted to show you guys. I wanted to show you guys some of the stuff that we got going on over here. So that took me a while to go through. So this is going to be a long video, of course, but again, you have the whole day to watch it. All right, so let's go ahead and take a look at some key stuff here now, starting off with the euro dollar. See what the euro dollar's been up to over there. See how this one's acting along here. And the euro dollar is another channel system that we were watching the euro with that's been acting pretty well, that we've been guiding you guys to. Now the euro dollar is holding this key level right here, or holding this against this key trend line from this 133 level. If we hold that key trend line, we can maybe get a bounce back up to this 135 level. All right, but look what the euro did now. All right, the euro broke back above this little key trend line that was marked from this little triangle right here, this little rising triangle wedge that we call the breakdown forward back. So they rallied it back up. All right, they rallied it back up. They broke us above that key trend line, trapped some longs in there, and now we're back below it. Sold off, back test held. We made a little lower high. So now we're questioning ourselves, is the euro actually going to sell off? They're going to start buying the dollar. That's going to start causing some pressure in the commodity space, which it kind of did a little bit on Friday, I believe. All right, so we'll see. We're still watching this euro, though. Let's take a look at that dollar. All right, we use the dollar and the euro, and then everything together. Everything kind of makes sense together. And if you need to know about market correlation, how things work together, you can send me an email. Maybe we could go over some stuff here in one of our free webinars that we could put together if you guys are interested in learning that. But take a look at the dollar. The dollar has not been able to break below the 79 level as we've been marking it back here. A lot of price action been going on between these levels, but has not been able to break. And now the dollar is on its way back up. We had this nice little head and shoulders pattern that looked like it was going to play out here. All right, but that broke down, held the 79 level again, ran back up, and got back above the level. So this is like a little shakeout right here, and now we're moving higher. And now the dollar is looking to possibly go back up and test these 81.50s. So the dollar is showing some strength right now, and that's something that we have to keep on watching here. Let's take a look at the weekly chart on the dollar real quick here, and you can see this is its dollar's third consecutive weekly higher close here. Take a look at the monthly. And the monthly is trying to hold above this key trend line that I have marked here, as you can see. After we had a little failed bull flag that we formed on the monthly time frame back here, we sold off, traded sideways, but we really didn't get the sell-off that you would have seen from a bear flag pattern. You know, usually a failed pattern usually resolves to a fast move in the opposite direction. But of course, they can manipulate the dollar, they can print money, do all the other kind of stuff. So let's take a look now at the VIX. Then we're going to take a look at the commodity space here. Starting off with the VIX. The VIX is still hanging around here. Still no fear in the market. Every time the VIX pops up, they sell it down here. But you can see we are now at this little triple bottom area. 1, 2, 3. Or you could just say a little support area, triple bottom support area, whatever you want to call it. Who cares? Just know that it's holding this key level right here. If we break below 12.25, all right, then we're going to maybe, obviously come down more here now that we've kind of try to build that base now. But however, if we hold this little level right here, this 12.25 level, chop around a bit, you start to see this move a higher close. If we start to see this move higher, and I start to see that we get some consecutive higher closes like this action right here, then I'm going to be a little bit, then I'm going to put some pieces of the puzzle together and say, okay, people are starting to buy some volatility. We could be expecting to move to the downside soon. So there's different clues that we're looking for, and at the moment we still need some more time to kind of figure out what's going to happen here. All right, so let's take a look at the commodities. I want to start off with gold because we nailed this gold trade here. We talked about gold getting weak. We talked about gold forming a pattern. We talked about how, in fact, the gold could come back down to the bottom of the channel. We mentioned that these key trend lines that we had in play from back here in early April, March, June, July was a key trend line we were going to watch. You can see they bounced off the trend line back here in December, again back here in January, again right here in February. Or say late January, early February, and then we finally broke right here this month. So now that we sold off, we could go down some more. We have a target, all right, down here towards this channel line, which comes from this key inflection points of this, this level, this level, this level, this level, this level. So we could go down here. So we could still move all the way down to 1582. We get down there. I would not recommend shorting it right here, though, if you didn't short it once we started holding below that key 1660 level. And then, or if you did short once we broke below that key 1630 level, your risk shorting down here is a little bit higher, especially since gold's volatile. But if we do break to 1580, then we retrace back to 1630, and that 1630 lower low, that little 1630 level holds, then that definitely means that's going to sell the gold here, and you got to be careful, and that's going to be a little lower high off these levels right here. However, if we get back above 1630, and we hold above 1630, then we break out. That means this will be a shakeout, and that would be a good buying opportunity in gold right now. But so, same thing. Gold looks like it wants to sell off some more. In the chat room on Thursday morning, On Thursday morning, I mentioned on it was a Thursday, no, Friday morning. I mentioned the fact that everybody, look, guys, if gold holds below 1630, you can expect this thing to sell off. And one of my partners in the room, Neil, he's pretty good at trading the news. He was like, "Oh, Coop, be careful with gold." He watches gold all the time. I'm like, dude, this thing on my technical chart shows me we could break down a lot. I would be careful. And what do you know? Bada bing, bada boom. We held below 1630. They weren't able to buy back up, and we sold off pretty nice. And if you take a look at the 15-minute chart, you can see how that took place there. They broke it down, that little 2-bar rally, then to the downside. All right, let's see here. This is a long video. This might be my longest one. Not sure that's a good thing or bad thing. But anyways, weekly chart of gold. All right, weekly chart of gold. We're at this key 1600 level. You can see this area that should have held as support didn't. We broke below it. And now, if we hold below 1642.30 is a real level on the weekly time frame. We hold below 1642.30. Expect gold to fade all the way down to 1566, which I think would be a good buying opportunity down there. We break below 1566, then you can expect these little wick areas that we're wicking out people down here to get tested. So we'll see how that plays out. Monthly chart of gold is working on its 1, 2, 3, 4, possibly its fifth lower close, consecutive lower close at that. All right, so keep that in mind there. Key level to watch on the monthly time frame for you intermediate to long-term holders is key 1556 an ounce level there. All right, so let's take a look at the GLD real quick. Since some of you guys watch the GLD key level to watch is 151.85, then 143.72. That is the monthly. On the weekly chart, key level to watch is down here. Weekly chart holding below this 160 level, or call it this 150, 158 level on the GLD. Could get a nice move back down towards 152.5, which I think will happen. All right, now that we finally broke down out this little consolidation that we had going on right here. So I'm still looking to the short side on the gold now, since we have that nice little breakdown, and people that I've been watching via YouTube videos like, I'm buying the dip in gold, I'm buying the dip in gold. Well, it would have been better if they would have been buying the dip in gold down here and been patient, besides buying the dip when gold was trading sideways. And there's a lot of people out there on the YouTube that were doing that, and I'm not going to call no names out, but and they're not, they may not be active traders like us, but it's still funny that they just think, oh, gold's going down, they're printing money, I'm buying the dip. And that's what I was talking about last week. Some guy was like, maybe everybody's leaned on the same trade where they buying gold because they think it's inflation and this and that, and they're printing money. Well, maybe that idea could be working out here, as people could be getting ready to unload the bag. And you can see here how since back here in December that this thing was not able to break and close below 160, and now on the closing prices, and now this past week we broke below 160 and got 2 confirmation closes with higher volume after not being able to have done that for the past 2 months or so. 1, 2, 3, 4, 5, 6, 7 weeks there. So pretty interesting in gold. Take a look at the GDX. You can see the GDX did break down, all right, like we were looking for it to do. We were looking for it to do, yeah. We broke below this key 44 level. We talked about the fact that if GDX was not able to rally back to 44 to test that level or break back inside our key channel that we've been highlighting in our videos, that we can expect the GDX to break down some more. And now you can see the GDX starting to pull away from that 42 level. The GDX sector looks to go down more. What levels are we working off of? Well, based on our proprietary channel analysis, I'll give you guys the level right now. We're going to be looking for it to come down towards this area right here, possibly. All right. You can see back here we were calling some moves in gold too. We're going to be looking for it to come back, most likely back down here towards, I would say, the 36 area, maybe 34. So there's still a lot of more downside in those gold miners. Take a look at the weekly chart. Weekly chart's right at this key 39.89 level here. And if we break below this, if we break and hold below 40 like we're at right now, we're going to be looking for a move down towards 39.90, 39. We break below 39 and we fall back inside this little channel that we're in, that we formed right here. We fall back below this key trend line that we have from right here, from this inflection point, this area, this area. So we break back below this key trend line. Well, that's going to put all these levels down here in play. Okay. Monthly chart on GDX gold miners. You can see the monthly chart, the key level that it should go back down to if we were to continue selling. It's going to be back down here towards 32.53, 35, 33 area or so. This little space right here. So we could definitely have another big bar down. The level you want to watch in the GDX is going to be if it breaks below 39. And since I don't forget, I'm actually going to go ahead and put an alert right now at alert last at or below, which I won't forget, but just in case at 39, oh, 39, 39, say 39, 30 or so, at or below. All right, so let's take a look at some mining stocks real quick since we're on this subject right now, talking about the miners. You can see GG, they had earnings, they didn't do too well and looks to go lower. Take a look at the 60-minute chart on it here. You can see it kind of bear flagging right here. Big sell bar, sideways action in the lower range, holding below 34. This thing's a shorted. ABX, one of the weaker ones out there, they had earnings, and when they came out with earnings, people used the opportunity to short the stock. Closed back on the lows, but selling pressure breaking below 31.30. So I'm actually going to put an alert for right now since we're on the subject. I would short it. Let's take a look at the 60-minute chart real quick. Same thing, same type of scenario. All right, big sell bar, sideways action holding below 31.72. Look to short it. They break it back about 31.72. We'll maybe see if it fills a gap. If it fills a gap, you can short off this little, possibly if it makes a little top, lower high right here. Short it then. I think they're going to make the gold miners a little bit tricky to short, but if gold is weak and they look weak in the morning, you can short them again and make some coin there. So anyway, so we'll take a look at some more of the miners, later on tonight in our live chart room session we have at 9:30 p.m. So silver, let's take a look at silver real quick here. SLV looks like it's not going to be able to break to the top side. It looks like they're probably going to knock it down to this little channel lines that we have right here on it. All right, these little channels that we've been watching on it, and those look like that's going to play out right there. So on the silver, breaking out this little wedge that looked like it was actually when silver was actually trading better than gold. You would have thought that this was probably going to break out, but then of course gold broke down, silver broke down, and what do you know? So now silver looks to go back below 28. If you guys recall, 29 was a key level that they were holding here back at the start of the year before they broke us out. So holding below 29 does not look good for silver. You take a look at some of these silver stocks, EXK, this one's getting smoked, and this one could continue to get smoked even though it's a cheap one. Take a look at CDE. CDE, this one looks like a good stock to short, breaking below 21. Wow, a good stock here. Take a look at the 60-minute chart, and look at this one. This one's going to be a good one, guys. Put this on your short radar. We will be watching the CDE below 21 for a short. You can work it off that whole number. Let's see. SLW was one that was trying to hold up a bit there, but even this one ended up breaking down to the downside. All right, and now it looks like it may want to sell off some more back down towards the 34 level. Take a look at the 60-minute chart on this one. You can see that one got some selling pressure there. So all in all, they all are looking weak. The precious metal sector is looking a little bit weak. PAAS, another one if you're looking for one to short that's breaking below these levels right here. Take a look at the 60-minute chart. This one breaking below 1675 or so and holding below could get some selling pressure. All right. All right, so let's take a look at copper real quick. All right, copper could not break back inside that supply zone that we have right here, right? All this little supply zone right here marked off. All right, another little supply zone right here marked off. This time they a little lower high in that little supply zone. And now it has this key trend line on it that looks like it's possibly breaking. All right, possible little wedge pattern going on right here now. And if copper sells off, that's definitely not going to be a good sign for us. Let me zoom in here. It's a better chart for you guys here. Copper selling off is not going to be a good sign here. And you can kind of see how this looks like a little possible wedge that's in play. If that happens, copper's going to sell all the way back down to 360. What are some stocks that you could short if copper sells off? Well, you could take a look at FCX, which we called that out for a short on Friday, and that worked out pretty well. And we're going to be looking for this to go down some more. Take a look at the 60-minute chart on it here. You can see it's kind of has a little bear flag in play right there. Finally breaking back below those 200-day moving averages on the 60-minute chart. You can take a look at SCCO. And this one could be putting in a little lower high here. So different things we're going to be looking for. What else here? And let's take a look at some key stocks now. This has to be my longest video, but hopefully you guys are eating a slice of pizza or something. But Apple is looking weak. Apple does not look like it wants to trade higher unless they come out with some crazy news like they did before. I believe when did they do that? Or is the rumors or any crazy rumors? I mean, but Apple breaking back below 460 It's going to actually have some people trapped to the long side that bought the earlier breakout above 460. And then this little area right here will act like an air pocket, as a lot of people, most people have their stops below this 460 level. All right, so if most people have their stops below 460 level, this thing can make a nice move back down to 445. We're going to be watching Apple on Friday. If you take a look at the 60-minute chart here real quick, you can see this thing is, was trading this little range right here for the past, say, half a day, full day, little minor day. Also, some people may be looking to get short with a stop above, say, 470, where you can risk about $10 to make a $30 move to the downside. A little 3-to-1 trade there if you're thinking about it from that perspective, which you should be, of course. So Apple looks interesting to the short side if you ask me. I'm not an Apple lover. I don't want anything iPhone, so I'm not putting opinions in the way, just straight price action. Amazon, AMZN, Amazon, actually trying to get a bounce here, but if this thing gets back below this 262 level, look for it to go right back down, and look for this action right here to just be a lot of shake and bake action from the short people and from the long people. Then they're probably going to wash it out, so we'll see. But holding above 262 would be kind of neutral to it, and then if we break above 270, we'll be back bullish on Amazon. IBM, this stock has not been able to hold up at all ever since it had the earnings. Kind of holding a base right now, trying to hold it around this 200 level here. It fell right back inside that little channel that we had in play, which is right here, that you guys can see. Fell back right inside that little channel. And the longer we hold below, say, 202, the most likely chance this thing has a chance to roll over. Now, if we consolidate between 202 and this 199 level for a little bit, and we start to see this thing catch a bid, then we can look to get long for a move back to the top side. That's how IBM's looking. Look at price line. Some of these big boy stocks there, price line still hanging in there. CMG's at a vulnerable area right now against this trend line here. For breaks below 310, this thing could get some selling pressure. You can see this little key trend line, little big shakeout pattern that happened right here. Trap some shorts down there in that gap down. But back below 310, and this thing could be make a move back down towards 290 or back down towards 300. So keep an eye on CMG. Back below that 310 level there. We actually have that one on watch for the short side as well, if it was to break below that level and hold. Some of the energy stocks are looking pretty good. Schlumberger had a nice little pop up there, then it pulled right back inside the bar. So we're still going to be watching these stocks. The OIH, like I said, was on fire. So if you take a look at the OIH inside day, we just want to make sure that this OIH doesn't break back below this little big expansion bar, and that would be that this was a trap, and that we have some nice sellers in there. And Halliburton was a standout stock in that one right there. And you can see Halliburton still holding the upper 50% range of that bar. Rig had a big day, then gapped down and screwed a whole bunch of people over. So if the market was a sell-off, keep an eye on Rig below 55.64, as they probably have some people that are trapped to the long side in that stock off that move right there. So we definitely have Rig on watch if the market sells off and they try to hit some of these energy stocks back down after having a nice day. All right, so that's about it. The video's already too long. I don't want to go over any more stuff. I do have a lot of stuff on watch, of course. Walmart had some key news on Friday that caused a lot of the selling pressure to get hit in some of these retail stocks and names and stuff like that. So we'll see how everything takes place. Have a great day, guys, and catch you guys tomorrow bright and early. If you're looking for a company, or I should say a firm to trade with, give me a shout. Contact me at cooper@wallstreettrading.com. We will get you set up with the correct prop firm that we do business with, that we give our traders that do our education to go sign up with them. They have the lowest rates, the best commission rates, highest profit splits, and the best leverage and buying power out there. In any case, have a great day, guys. Enjoy the video.